Good morning. Well, it's promising to be an exciting morning, a little quiet on the money markets, a lot of excitement on the equities. It's all about what Dr. Rajan has to deliver in about 30 minutes from now.
Well, that's really the big trigger which markets seem to be watching out for. That's really going to be the once again to watch out as to what really comes in from the RBI policy this time around. Remember, the broader expectation is to keep interest rates unchanged for the second time in 6 weeks is what the expectation is. In fact, we were a whole host of lineup today.
A big lineup, but don't bank on what the survey says. Remember, he has a habit of going the other way around and keeping the economists on their toes, but we've got a full lineup for you over the next hour or so as we head into this policy. Well, we'll be joined by RBI Godrej, needs no introduction, chairman of the Godrej Industries Group, as well as Jahangir Aziz all the way from Singapore to see what the FI interest and what the economists are really saying. And joining us right here in studio is Mr. Ajay Marwa. He's head of Treasury Trading at HDFC Bank, and Saugata will be joining us on the economy front as well. So that's what's happening, but when does it really kick off? 11 a.m. That's when the embargo releases, and you'll be able to hear out what Dr. Rajan has delivered this time. Remember, December, he surprised the markets with a big pause and said we'll wait out for more details in the inflation figures. Those have come out. He will take questions from journalists, and that's when it gets a little tricky at 12:15 as well. Well, let's take a check on how the markets are doing before we head across to our guest first up. Priyank, it's a little quiet on the equities, most of the results playing out right now. But how's the market reading this going into this policy this morning?
You know, one of the interesting bit as we approach the policy has been the kind of turmoil that's actually thrown up in terms of global markets. Remember, last couple of days, we've seen a major sell-off coming in, and today's move also, the morning calm that we've actually seen ahead of that policy is predominantly on the back of those global cues which has seen a tad bit of improvement, and you haven't seen that fear element, at least as far as the Asian indices were concerned. And that's what's playing out right now. Nifty trading marginally higher by around about 0.3%. Sensex also holding on to gains of roughly around 53, 54 odd points. So it's just calm probably before what we pick up most in terms of the RBI decision, as well as the kind of commentary that the street seems to be awaiting, because the currency also, it's trading a tad bit better in terms of trade today, but it's still quite elevated because you're talking of levels of almost 63 is what we're seeing on the currency. And yesterday's move itself was quite astonishing that we actually picked up on the way the currency markets actually pan out. Just put out the bank nifty for you as well, and just a quick mention on the banking counters and the way it's playing out. So that index is trading higher by roughly around 1%, Anu, is what we're seeing. So probably a little bit of a respite coming in and just a little bit of a rebound in terms of the markets before we expect something from the policy.
Let's see what's expected. 25 minutes odd to go. Jahangir Aziz joins in on the show from Singapore. And we get a money market check going with Ajay as well. Just a bit. Jahangir, I'm going to start up with the fact that Dr. Rajan has made life a little difficult for economists, as he's made the calls even closer now with the new panel report also coming in. Basically at JP Morgan right now, what do you expect in the next 25 minutes?
I think, it might be a close call, but we are still looking for the RBI to keep interest rates on hold. There were two main arguments that the RBI had made in the last policy review. One was that it wanted to see food inflation drive down headline inflation, which has happened. And it didn't want to see core inflation move up. And if you make a hair-splitting argument, you could probably find evidence that core inflation hasn't moved up. So I think based on just those two, our sense is that even though it might be a close call, most likely the RBI is going to keep things on hold. But things do not look very good at all.
Jahangir, just hold that thought. Let me also get Mr. Marwa into the conversation. Now, clearly, we've been building up, we've been hearing as to what kind of commentary the governor has actually been talking about. You also had that crucial panel report that came in just a couple of days back. Right. Building into this policy, as we approach it in just 25 minutes odd left, what are your expectations?
I think it's going to be a close call. I don't think you can right away or wish away a rate hike. Okay. I think you still have concerns on inflation rife. I understand very clearly that some of the things that the governor expected have indeed happened with the top line inflation numbers. But core CPI, which is really the number that RBI is watching, has remained elevated and in fact marginally inched up. So I don't think you can wish away the pressure on rates. Now, whether that
yield market telling you at this point, we've gone back to 8.73, Ajay. A no rate hike, will that soften yields a bit or harden them further, because the expectation of a rate hike, maybe not this time, then it's making it more obvious that it's going to come around maybe the next time around, right?
I think the market's going to be on its toes, quite frankly. Even if there is no rate hike, they're going to watch out for what kind of statements come out and, what's the governor really looking at. And my own sense is, can you take the foot off the pedal when core CPI continues to remain elevated? The answer is no, because that's the guidance we've really seen from them. So I think the RBI is going to remain watchful. As long as the RBI is watchful, the markets are going to be watchful. So, I think it's 50-50 in terms of whether he's going to hike rates or not. But I think the markets are going to be quite nervous and edgy.
Just 50 points up on the Sensex, so the markets are edgy this morning as well. Let's welcome in a corporate at this point. We've heard economist view, the money market view. Adi Godrej joins us. Mr. Godrej, we've been reiterating the poll suggests that most expect a status quo on rates. Some are being brave out there and saying there could be a possibility a rate hike. What is your expectation? What's corporate India really expecting from the RBI policy this morning?
No, I don't think there is likely to be a rate hike. There should not be a rate hike. I think clearly the concern is growth. Inflation seems to be coming under control. So to my mind, a rate hike is not indicated. And in fact, sooner or later, a rate reduction will be called for, because our biggest problem currently is growth, not inflation. Inflation is coming under control.
So Godrej, just hold that thought. Let me come back to Jahangir now. Jahangir, is this too close to call this policy? Because, do you leave the possibility of a hike open, but if not today, then are you penciling in more hikes for the year, especially in the backdrop of the Patel panel report?
We do expect rate hikes in the first half of the year, but it has nothing to do with the Urjit Patel committee. I think people are, grossly misinterpreting the Urjit Patel committee report. It's a bunch of proposals. The RBI hasn't said yes or no to it. The RBI is going to look at it and then decide whether or not, in fact, whether this should be implemented. I think the Urjit Patel committee report is for the medium term. I think what people aren't looking at is that on the headline inflation numbers, including food inflation, that we've seen this movie before. And our sense is that December month was a great month for food inflation. We think part of the decline in food prices will be filtered through in the January numbers, but that's about it. February onwards, which will be out in March, we will see we'll see food inflation crawling back up. And what is more disconcerting, and this is where we are very uneasy about, keeping rates on hold, is that core inflation is at 8% for the last 6-7 months, and that is in an environment in which growth has slipped quite sharply. So, unless RBI does something now, then 6 to 9 months from now, when much of the market and most of the analysts expect growth rate to pick up, backed with rebound in the investment cycle, and if we are going into that phase with 8% core inflation, imagine what will happen to headline inflation.
That's a worrying point. Ajay is furiously agreeing with what Jahangir is saying. It's usually good when you get, it makes better television when everybody disagrees, but is that the same thought process that you're going with?
I think Jahangir's point of view is basically taking a cue from what the guidance has been from the RBI. And really, if you look at the medium term process, right, I mean, what is the governor saying? The governor is saying we really want to argue for positive real rates. Okay. Positive real rates, at least at the ground level, means core CPI should be far lower than where it is today, which is 8%. Sure. If you're going to argue for core CPI to fall to 5 and 6%, we have a long way to go. And I completely understand that, monetary policy is not the answer to all questions, but clearly you can't ease monetary policy and let the foot off the pedal, because if you do that and core CPI goes back up to 9% you're in trouble. So, it's really a difficult kind of management situation. And my own sense is, if he's going to err, he will err on the side of caution and hike early rather than hike late. And what we can see in the inflation trajectory, they can see better. And that's my argument.
But just before we head into a break, Ajay, does it bother you as an economist, as someone who's been watching these markets, that we're now pegging massive monetary policy on something that we only have 2 years of data for?
Yes and no. The point is that perhaps we should have always wanted and looked at this data, because really that is the relevant data. We've looked at WPI, and WPI, we know now, has been quite meaningless, right? I mean, we've seen the impact of seasonality, we've seen the impact of one-off factors on it, and really it is not anecdotally important, right? What is really important is CPI, and even CPI perhaps is not comprehensive enough. So, you know, we know that there is a little bit of a problem.
Little bit of problem with CPI is what we should be looking at, and that's what should make the market a little nervous, because if that's the number he's watching, there could be a rate hike, but we'll find out in about 15 minutes. Let's take a quick break. On the other side, Saugata Bhattacharya will also be joining us, and our panel stays with us. Stay with us.